Chamber of Commerce and Industry, Dr. Muda Yusuf. He joins me live in the studio. Merry Christmas to you, sir.
Merry Christmas to you.
It's really great to have you in the studio today. Now, let's start with after the elections, a lot of uncertainties in the economy. Some investors had to go back. We knew what happened and all that before we now had the results and we moved on. Now, what would you say, what effect would you say that really had on Nigerian economy's performance for 2019?
Well, each time you have elections, there are issues about uncertainty. There are issues about risks as to what the policy direction of government will be. There are risks as to what the action of even some ministries and ministers will be concerning either existing projects or new projects. So the uncertainty that comes with the economy actually slowed down the momentum and the tempo of economic activities, at least in the first quarter of the year. But soon after that, I think the economy became, regained some measure of momentum. And luckily, there weren't too much of issues around the elections. Of course, the opposition party went to court and all of that. But there weren't major issues that disrupted the flow of economic activities. So generally, I think we were able to get over it. But looking at the economy from the macro side, because when we are assessing the economy, we look at it from a multi-dimensional point of view. There is a macroeconomic angle. That's looking at the key macroeconomic indicators. There is also the policy angle, because during the year, there were a lot of policies that businesses had to contend with. Some were positive, some were negative, some were mixed, some impacted the welfare of the people. There were also regulatory issues. The regulators came up with different kind of policies that affected the investment environment. Then there are also investment climate issues. Because when we talk about economic management, what matters to the average Nigerian is the impact on welfare.
Very importantly, that's inclusive growth.
Yes, it's very key. And when we talk about business, what matters to the average business person is the impact on his bottom line. How well the business is doing, the prosperity of business. So in order to do a holistic review of the economy, we need to look at all these key dimensions of the economy. So if we start with the macroeconomic issues, for instance, the GDP performance wasn't that bad.
We had 2.01% for the first quarter, second quarter 2.12%, and third quarter 2.28%.
Generally, that is not bad. First, because it's on a positive trajectory. And if you look at it compared to what it was last year it was about 1.94.
Yes.
Now we are talking about 2.28. I mean, that's an improvement, And again, if you look at the exchange rate, if you look at the market rate, of course, the official rate was 305. That is permanent and fixed. But we reckon more with what you can regard as the market rate. And it was between 360 to 363, maybe to 365. But generally, it was stable.
Yes.
Again, both for the citizens and for businesses, that was good. And I think we should commend the central bank for that, even though there could be discussions around the cost of that to the economy. But generally, it's a good thing that we had this stable exchange. So it enables businesses to plan better, because when exchange rate becomes very volatile, planning becomes difficult. The risk of doing business also becomes difficult. So the stability was good. Of course, we had issues with the multiplicity of rates and all of that. But generally, we need to appreciate the fact that the exchange rate was stable for most parts of the year. Then the foreign reserves, even though it came under some pressure lately, but it's still at around 39 billion US dollars.
The central bank is saying no cause for alarm.
Yes, well, we have been assured that there is no cause for alarm. So that
but
means
some analysts say it's quite worrisome.
Well, it's worrisome, but so far at least the CBN has managed to demonstrate that it's on top of the situation. So at 39 billion US dollars, it's a fairly comfortable position in terms of its ability to cover our imports for close to 6 months or more. So on the score of that, I think we can say that We didn't do badly. Now, the inflationary situation in the last few months became an issue because of a combination of factors.
One big one is border closure.
The border closure was a big
Which
one.
Which must be identified.
Exactly. It's a big one, even though it's difficult to argue based on the legitimacy of the supply of those things, you know, because if a product is coming in and supporting the supply side and it's coming through a channel that is not legitimate, that is an issue. But from a purely economic point of view, it has an impact on price. Then, of course, we have issues with flooding, which also affected productivity. We had issues also with security, which also affected some farming communities. So a combination of all of that, you know, contributed to the inflation. And of course, during the year, we had this adjustment of the exchange rate for the computation of import duty. There's a marginal increase in that, which also increased the cost of imports and also translated to additional pressure on prices. So generally, the inflationary situation wasn't so good. We are talking about 11.85 thereabouts. And the thing about inflation is that, first, it erodes what you call the real income of consumers. It weakens purchasing power and therefore impacts on poverty adversely. You know, it also increases the cost of production for those who are in investment.
There have also been this argument, DG, that at the rate which our GDP now continues to grow and at the rate our population continues to grow, the difference shows that many Nigerians are sliding into poverty as we move on. I don't know if you agree to that.
It's a valid point. If population growth is outpacing the GDP growth, then it has a way of, you know, escalating the rate of poverty that we have. But more importantly, when we talk about growth, the inclusiveness of growth is very important. Because over the years, the major driver of growth has been actually the oil and gas sector. And you notice that there's a correlation between the performance of the oil price and oil outputs and the GDP growth. Yes. Generally, there is that correlation. And the argument has been that the oil sector is not an inclusive sector by the very nature of the fact that it doesn't involve too many people, by the very nature of the fact that it's a highly capital-intensive sector, by the fact that we don't have too many small businesses playing in that sector. So that limits the impact on welfare. It limits the impact on poverty. So when we celebrate growth, we should be looking at how inclusive,
you know, if that should be happening in manufacturing, in agriculture,
trade, you know, services and so on.
The impact will be
the impact will be more.
Yeah.
So it's not enough to just look at the nominal growth. We should also be looking at the inclusiveness of the growth. Which sectors are actually driving the growth? I think that is important.
DG, I like us to also talk about this. We're not going to talk about the economy, which you've also identified, and now talk about what the central bank has been doing. Yeah. We see a lot of defense. We see a lot of ways trying to manage this economy. Yeah. Now, agriculture has been one focus too, where we see a lot of money is going into the textile industry to also discourage imports and all of that. So how well would you say this has played out? Are we really feeling the impact? We hear number of millions of rice farmers. I can agree, and many Nigerians will agree that those that even get rice free this time is not the way it used to be. Yeah. So what is really happening? How do we merge all of this together?
Well, the issue is that the monetary policy instruments are not enough to solve this problem.
The fiscal side.
Yes, because when we talk about production and productivity in the economy, there are quite a number of structural issues that we need to deal with. Now, we talk about security. Monetary policy cannot fix security problem. Monetary policy cannot fix issues of land and access to land. Monetary policy cannot fix issues of seedlings, the high-yield seedlings, some of this equipment that you need to mechanize agriculture. Monetary policy cannot fix the issue of roads And, because without all this fundamental infrastructure, it is difficult for those policy measures to have the right kind of impact. Because if you look at the agricultural space, it is still basically driven by the smallholder farmers. And when you have that kind of structure, productivity is an issue. And that is why smuggling is thriving so much. Because there is a big gap between what the domestic demand is and what the capacity of the economy to produce some of these things are. It is not easy to sustain this economy food-wise, ensure food security with hoes and cutlasses. It's not easy. It's almost impossible.
Yeah, we'll move that ahead of that.
So we have not been able to actually transform the agricultural sector to a mechanized space. If it is mechanized, you don't even need so many people to be in agriculture. The use of technology in agriculture is still very limited.
It's true.
Then there are challenges of off-takers within the agricultural space. And you have this volatility in prices of agricultural products. During harvest seasons, the prices crash.
At the time they talked of a commodity market, I don't know how that can also help in pricing.
Well, it can help, but you also need some infrastructure to support that. You need storage facilities. You need transportation to facilitate domestic economic integration so that products can move easily from where it is produced to where it is needed. These things are fundamental and they are structural issues. So that is why the intervention of the CBN has very limited impact. Because unless we synchronize these policy measures, we cannot go for. And the state government also have a big role to play.
Yes. I agree with you.
There are some states that don't have more than 2 tractors to facilitate mechanization of agriculture. And if you don't have that kind of support, how do you support the farmers? Because all over the world, if you don't subsidize and support farmers, especially at the input level, and possibly even at the output level, it is very difficult to get the kind of transformation that we'll expect in the agricultural sector. Because in many environments, the farmers are just on their own. The farmers are on their own. The CBN has been doing a lot, but in terms of impact and penetration, it is also very limited when you compare it to the population of the farming community that we have.
And even those that want to eat that food, more than 200 million people according to figures.
Exactly.
And in 2050 projected to be double of that figure, about 400. That's also worrisome. DG, now let's look at some of us, like the approval of the 10.59 trillion naira budget, which many say has brought Nigeria back to the January-December circle. Some say this will help plan, it will help investment come in. Investors will be confident, maybe a little bit on the economic issues. And I don't know how you see this. Going back to the January-December circle, what are the positives?
Well, the positives are the fact that, first, we must commend the executive and the National Assembly for returning the country back to the January to December cycle. I knew it took quite a lot of commitment on the part of the 2 arms of government to make that happen. So we must appreciate that, because it increases, it makes, it reduces the level of uncertainty. It makes planning easier, both on the private sector side and on the public sector side. Because we have some segments of the private sector whose business activities are also driven by public sector expenditure, especially those in the construction sector and those who also engage in one form of supplies or the other to the government. Okay. So it makes it easier for them to plan. And it also makes it easier for government also to plan. So we must commend that because of the impact it will have on both the planning and also on implementation of the budget. Okay. Because sometimes, because of all this shifting cycle of budget, even some analysts get confused. You don't know when the budget implementation is starting. You don't know when it is terminating. It is overlapping and all of that. So all those confusion, I think, will be removed by this.
I will let you go. We'll already touch quickly on issues around border closure. We touched it earlier, but we didn't really dwell into it. What's your position now? I know you've had a lot of press releases. You've talked about this. What's your position, and how is this really affecting members of the private sector?
Well, the border closure is a mixed bag. It has positives. It also has its demerits. The positive is that it has stimulated through the generation of increased domestic demand for domestic production. For domestic production.
Okay.
We are talking about poultry products, for instance. Okay. Those who are producing locally are doing well now. We are talking about rice production. We are talking about sugar. We are talking about vegetable oil, palm oil, and the rest of them. So to that extent, and of course, it has reduced the smuggling of petroleum products outside the country. Then there's also the security argument. That is neither here nor there. But I hear that it has also impacted on the security situation positively. To that extent, I think it's a good thing. And also to the extent that it is now beginning to make the neighboring countries to think properly, to think about complying better with ECOWAS protocols and all of that. I think that is also a positive. But the negative is that it has also affected a lot of informal sector traders who make a living from trading across borders. For instance, if you visit markets in Lagos, like the trade fair, Aspanda market, like the spare parts market, like even in Okeani, a lot of demands come from the neighboring countries, almost on a daily basis, to buy things that are exported to the neighboring countries. The closure of the border has affected them massively. Then we have some manufacturing concerns. Their products are what we call the ETLS products. The ETLS products are products that have been registered under the ECOWAS Trade Liberalization Scheme. These are products that if you produce in Nigeria or you produce in other West African countries, you can trade freely without any encumbrances. All those have also been affected. I also know of multinational companies that get some of their inputs from the neighboring countries for production. Some of them produce here and also sell in the neighboring countries or across the West African sub-region. All those productions have been severely disrupted. So that is why I said that it's a mixed bag. But what is important in all of this is to look at the fundamental issues so that we don't deploy a solution that is not sustainable. It's only a matter of time before smugglers begin to devise other means of circumventing all of this. So we need to address the fundamental issues, first of the capacity to manage the borders, in terms of personnel and in terms of technology. We need to look at issues of domestic productivity. Because if you are operating in an environment where the cost of production is too high, the natural tendency is for consumers to be looking for cheaper options. So we need to see whatever we can do to support those who are in production to bring down their cost of production. We have talked about issues of infrastructure. We have talked sometimes issues of even tariffs on some of their intermediate products, issues of technology and things like that. So we need to support them so that cost of production can come down. Their products can become more affordable. Then we need to look at our tariffs. Sometimes our import tariffs are too high. And when import tariffs are too high, it's an incentive for smuggling. So we should keep tariffs at levels that are sustainable, at levels that will not hurt domestic production. These are issues that we need to look at.
Really beautiful. In 1 minute, let's round up. What's the message from the fiscal side and the monetary side? 2020, now that it's not like it's an election year where we're not waiting for ministers, they already have their offices, they've got to get to work. What are our expectations? First quarter, 2020.
Well, first, there is need for proper alignment and synchronization of policies. Second, there is a need to ensure that we ensure productivity in this economy. Protectionism is good, but productivity is what can make economic growth and real sector development more sustainable. So we should look at all these bottlenecks that those who are producing are facing, so that we remove these bottlenecks, so that they can produce more competitively, they can use more technology, so that we can, stop all this problem of, border issues and all of that. Because if productivity increases, the pressure to be looking outwards will also reduce. So that is very key. And on the monetary side, we also need to watch the way we intervene. It is good to strengthen the currency, but we should also not overdo it. Because stronger currencies penalizes domestic production, it encourages imports. So we need to deal with these issues also from a monetary policy, foreign exchange policy point of view. So all these things need to be looked at in a very holistic manner.
Dr. Muda Yusuf, the Director General, Lagos Chamber of Commerce and Industry. Thank you very much. It's always great having you on the show. Thank you.
Thank you.